margin call, margin call, margin call, and then lost everything. One small mistake with leverage and your account is gone. High leverage equals high risk. Let's start by understanding what margin and leverage really mean and why most beginner traders use them the wrong way. Please like and subscribe for more videos.
1. The power of leverage. 2. Understanding your margin. 3. The dreaded margin call trap. 4. The biggest beginner mistake. And 5. How to trade like a professional.
All right, let's jump right into part 1, the power of leverage and how it multiplies your capabilities. So right out of the gate, what actually is leverage? Put simply, it's a tool your broker gives you that lets you control a much larger position using a pretty small amount of your own money. It's essentially an amplifier for your buying power. You really don't need a massive bankroll to trade like the big players, because the broker is basically lending you the capital so you can punch way above your weight class. Just imagine you want to control a massive $10,000 position in the market. Now, normally, you'd need 10 grand in cold hard cash sitting in your account to make that happen. But with leverage, you can command that exact same market footprint with just a tiny fraction of that cash actually sitting in your account. It's kind of wild when you think about it. The math here is beautifully simple, actually. Step 1, you start with just $100 of your own capital. Step 2, you apply a 1-to-100 leverage ratio, which your broker provides. And step 3, boom, you are now controlling a $10,000 position. You just multiply your $100 by that 1-to-100 leverage, and it gets you right to that $10,000 market exposure. It is a massive multiplier for small traders. Now, brokers will offer you all sorts of leverage levels. You'll see 1-to-10, 1-to-50, 1-to-100, sometimes even up to extreme levels like 1-to-500 or 1,000. But you've got to heed this warning. Leverage is the ultimate double-edged sword. Sure, higher leverage accelerates your profits, but it will absolutely accelerate your losses just as fast. It amplifies everything. Okay, so here is the crucial difference we need to get straight. Leverage is what allows you to control those giant positions. But margin is the required collateral to actually open them. Think of it like this. If leverage is the power you're wielding, margin is the cost, or the deposit your broker demands to let you use that power. You literally can't have one without the other. Which brings us seamlessly to section 2, understanding your margin, the cost of your power. Let's look at how your broker actually calculates this cost. The formula is super straightforward. Your margin equals your trade size divided by your leverage. So going back to our practical example, if you want to open that $10,000 trade and you're using 1-to-100 leverage, the broker takes that $10,000, divides it by 100, and gets $100. That $100 is your margin. The broker locks up exactly $100 of your money as collateral just to keep that trade open. Moving on to section 3. And this is the scary part, the margin call trap. And what happens when the trade turns against you? It's the phrase that strikes fear into the heart of every trader. Margin call. But what exactly is it? Like, what actually triggers this total catastrophe in a trader's account? Well, a margin call happens when your losses get way too large and your account simply doesn't have enough margin left to support your open trades. Remember that locked collateral we just talked about? If the market swings against you hard enough that your free balance drops to a critical level, that locked money can't sustain the bleeding anymore. Your broker looks at your account and realizes, uh-oh, they don't have the funds to cover any more losses. And the reality of a margin call? It's basically the financial equivalent of a horror movie jump scare. First, your broker might send you a warning, like an urgent email telling you to deposit more funds right now. But honestly, you can't rely on that. Because point number 2, your trades can and will be closed automatically. The broker will forcefully liquidate your positions to protect their own money. And the harsh truth here in point 3, this is almost always caused by just poor risk management. It's a direct consequence of failing to protect your capital. So, let's talk about section 4, the biggest beginner mistake. And trust me, it's not what you think. We need to totally debunk a major myth right now. Leverage itself, it is not dangerous. The tool isn't evil. Going back to our analogy, a chainsaw isn't evil just because the blade is sharp, right? The real danger completely lies in using position sizes that are just way too big. Oversizing your trades is what blows up accounts. It's not the leverage ratio your broker gave you. This comparison really makes it crystal clear. Look at the trader on the left. They're using massive 1-to-500 leverage, but they are using proper risk management and really strict position sizing. that trader is going to survive a long time in the markets. Now look at the right. A trader using a much lower 1 to 50 leverage, but carelessly throwing around huge lot sizes. That account is in extreme danger. At the end of the day, it is all about how you manage the size of your trade, not the size of your leverage. Which brings us to our final part, Section 5, how to trade like a professional and actually master this tool. If you want to survive and actually thrive as a smaller trader, you absolutely have to follow these professional rules. Number 1, risk only 1 to 2% of your account per trade. That is the golden rule for not blowing up your account. Number 2, religiously use a stop loss. Just never trade without one, period. Number 3, like we literally just covered, avoid oversized positions at all costs. Number 4, stop trying to get rich quick. Don't chase those fast, flashy profits. And finally, treat leverage exactly for what it is, a tool. It is not some magical shortcut to endless wealth.
So I'm going to leave you with this final thought. Are you using leverage as a calculated tool? Or is your desire for a shortcut allowing the leverage to use you? Really sit with that before you calculate your margin and place your next trade. Thanks so much for joining me on this explainer, and hey, trade safely out there.